Okay. And so I'll tell you, ladies and gentlemen, Jeremy has never trained at a premier event before, so he might be nervous, or maybe this is just talking about taxes, who knows what. But either way, I'm sure we'll learn something. And so this is definitely a part of training. You're going to want to get your notes out because you're going to glean a lot of information on filing your taxes, as a jointly, being self-employed, and all those things. And so I think we should give it up for Jeremy.
All right. Well, I know that taxes are the most exciting thing you guys are going to talk about. So I'm excited to present on the most exciting thing that's going to happen, and we are going to have the most fun. So we're going to start out with a little, because taxes are fun, right?
Oh, yeah. Yeah.
Okay, see, 2 people. So we're going to change your perspective. We're going to do a little chant. So I'm going to say taxes, you're going to say fun. And then I'm going to say taxes, and you're going to say money. And then I'm going to say taxes, and you're going to say big refund. Who likes big taxes? All right, so get ready. I know you ladies get all scream because you were going to for the next 3 hours. So ready? I say taxes, you say okay, ready? Taxes!
Fun!
Taxes!
Money!
Taxes!
Big refunds!
That's pretty good. So, all right, so so a couple things. IRS is serious business, right? Does anyone, have you ever had to sit with the IRS? And, okay, well.
You have, I have.
Here's a little, I'm going to show you a little bit what it's like if you're going to have to sit with the IRS. See what the sign says. Like the sign says, it's all theirs, right? So as long as you know that going into it, you're in good shape. Look at that here in a second. Now, you guys know what the IRS, their slogan is?
We're always right. Yeah.
It's pretty close. Did you see it before? Don't cheat. That's the answer.
Oh, sorry.
No.
You're clear. I can't say anything.
Thank you, Brittany. So, all right. So then I'm gonna show you their slogan because this is important to remember when you're having your taxes done. It's we have what it takes to take what you have. So if you're not careful, they will do that. So now, in all seriousness, they have simplified the tax filing form this year, and so it's going to be real easy. And so it's the new simplified 1040.
Oh dear.
They have the 1040 EZ. That's like 20 pages or 20 lines long. They've got it down to basically 2, and this is it. So part 1. How much did you make? Part 2, send it in. Okay? That's, and then you're done. So, all right. Now, so I've been in the tax business for about 15 years, and I've prepared like 15 tax returns. That's my own every year. And that's usually a struggle. So, in all reality, I'm not a tax expert, but I've been in the business for a long time. I've picked up a few things along the way. And the reality is I was the only option for this discussion. Actually, my employees would laugh at me when I was in the office trying to do my own tax return because they knew it was a joke. But I have been self-employed for a long time, and I've learned a lot over the years. So hopefully there'll be a few things that answer your questions and help guide you through doing your tax return this year. Or if you decide better not to touch it, I've got some, actually I left them in the back, but I've got some referral cards and coupons for you if that's the way you decide you'd rather go. But, so I've got like 15 minutes left, so I'm gonna power through it. I'll try to, if there's something that doesn't make sense at all, please stop me, and then I'll try to clarify. If there's specific questions, then hopefully I'll have a couple minutes when I get through this, and then we can address some questions, either as a group or at the end, or a combination of that. So, but just know I'm not a detailed tax expert, I'm not a CPA, but I do have a little bit of knowledge in this area. So, first of all, who in here has not owned a business before? Because now you're self-employed. So has anyone not been self-employed before? Which is probably most. Okay. So prior to Premier. So if you are an employee, your employer, let's say just for simple math, say you make $100,000 a year. Your employer takes out Social Security and Medicare, from your check. That's separate from your federal and state taxes, right? That's a separate tax, but your Social Security and Medicare is 7.5%. So they would take out, that's actually 7.65%. So they take out $7,600 from your check, and you get the rest, less any state taxes. They also pay, you don't ever see this on your paycheck or on your W-2, but that's only half of what's actually charged. The employer pays another $7,650 to the government on your behalf. The employer is obligated for half, you're obligated for half. When you're self-employed, there's no employer taking that out of your paycheck, right, for you. So you actually pay what's called self-employment tax, and that's going to be separate in addition to any federal income tax or state income tax that you pay. And that's going to be calculated by going through what I'm going to take you through here over the next few minutes. And you're only going to pay that self-employment tax on the taxable income that shows on your Schedule C, which is, I'll talk about that in a minute, but I was going to show an example of that, but that's all right, it'd be too complicated. So you'll only pay that self-employment tax on the income that you make through your business. Everything else is taxed just normally, not any other income that you may have. So when you file your tax return, I'm kind of assume that you're going to, some of you, if not most of you, are going to try to do this yourself. I'm not necessarily recommending that you do, but that's up to you. But try to either help you be knowledgeable enough to give it a go on your own if you're comfortable with that, or to know what to prepare if you're going to take it to someone, because they might not be an expert in this type of business, so they can take the information you get and know where to plug it, but they might not help you dig and know what type of expenses you have. So we're going to try to get into some of that. So what's going to happen is you have your 1040. Let's say you own a home and you itemize deductions. That goes on a Schedule A, just for example. Now, if you run a business and you're self-employed, it's going to go on a Schedule C. And so that gets attached to your 1040 and determines what your self-employment income is. Now, it's very likely, and I'm going to say hopeful, that you're going to show a loss on your Schedule C. So it's important to know that you're probably going to show a small income or a loss unless you have a significant downline where you're earning commissions. So, and just because your Schedule C, just because your tax return for your business shows a loss, please know that does not mean, especially husbands in here, that does not mean that you didn't make money. The way our tax system works is what you pay taxes on and what you get and you put in your pocket are two completely different things. And that's not, I'm not talking about taking money under the table and putting it in your pocket. I'm just talking about our tax system, the way it works. Profit and taxable income are two completely different things. So it will be a good thing if you show a minimal profit or if you have a loss. It's going to help your taxes. unless you're trying to get a loan or something, then, that's a different story, right? But, so, there's a lot of things we can deduct that you get to just report as an expense on your Schedule C. I'm going to talk about those. And they're not necessarily a reflection of what you get to put in your pocket, what you made for take-home. For take-home, that's substantially different what we pay tax on and what we get to put in our pocket in this business. So that's kind of a cool thing. Even though you have to pay that self-employment tax, which feels like a ripoff when all of a sudden you're paying 15.2 instead of 7.6, the benefit is there's deductions you get to take that if you're an employee, you don't get to do that. So, so your tax returns to determine how much you owe, how much tax you owe. It's not determining how much you put in your pocket. They're two very different things. So, now the IRS likes to see a profit in general 3 out of 5 years. It's okay if it ends up not being exactly that, but that's kind of the rule of thumb. If you're going 5 years and it's loss, what they're going to say is that's not a business, that's a hobby. That's fine, but you can't keep claiming the loss every year. So, so let's talk a little bit about what's deductible. So, as a general rule of thumb, anything you spend to make money or to operate your business is deductible. So that's just kind of the overarching thing. So you can ask yourself, am I doing this to run the business? Am I doing this to make money? Then if the answer is yes, it's probably deductible. So the first thing is the big thing, and this is probably obvious, is the jewelry that you buy for yourself, for your display, for the shows, or that's sold to your customers. All that runs through your business, right? And so all of that is a deduction, and that's going to be your biggest deduction. I put that on pretty early on in the Schedule C, and it might say COGS, or cost of goods sold. That's just your jewelry, or any jewelry that's purchased through your business. That's probably going to be your biggest expense, and I'm pretty sure then that's probably the most obvious expense too. So the next biggest expense that you're going to have most likely is your mileage deduction. Now that's 54 cents per mile that you drive related to your business is going to be a deduction. So drive here tonight, say it's 10 miles, how much you get to deduct? $5.40. I didn't even calculate. I get another $5 on the way home.
Right.
So round trip both ways. So to or from home shows, that mileage is deductible. To or from monthly trainings, that mileage is deductible. Kate and I took separate cards, so we're going to be anyone deliver jewelry for various reasons? That's a deduction. That's mileage is deductible. The whole there and back. To the post office, to and from the airport if you're going there for premier travel. Raleigh in Denver. 54 cents per mile adds up very quickly. So you may have, depending on how many of those types of trips, you may have quite a few miles to deduct. But what you can't do, for simplicity's sake, oil changes on your car, not deductible. Your car payment, can't take it. Maintenance, car goes bad, you need to replace the engine, that's not a deduction. All right, so it's just mileage. And you need to have a log. So the IRS knows we're not real good about creating logs as we go. So you can actually recreate a log, and what it needs to have is the date, the purpose of the trip, the starting location, which is usually like home, right? And then the where the destination is. So
Date, purpose of the trip, destination.
Starting.
starting location. Yeah. So if you have, and then of course the total miles, each trip, right? Each direction. So if you're recreating it, you can go, if you're handy with Excel, you can go in there and do that really quick. Now there are apps like MileIQ. Kate used it this last year. We haven't got to working with it yet to see what it all came out to, so we'll see how it works. But there are apps that just track your miles, and you can just say whether it's a business trip or not as you go or afterwards. So you may, if you're doing a lot of driving, that might be worth it. But as you can see, that's going to add up. Definitely does not cost you 54 cents per mile in gas. You can almost make money driving around, like taking 54 cents a mile. So
We've used that for over a year, the MileIQ, and it's saving us a ton of money.
And time.
and time,
Money
yeah.
is time. It's amazing.
But you can go back. So if you didn't use it, it's too late to use that for last year. But you can start using it moving forward. But just you can make a log, pen and paper, or Excel. But you want to have something that shows all that.
Hood House shows it too.
And so you can put it into Hood House, and I'll talk a little bit about Hood House as well. So, yeah, you can type all that into Hood House. They ask for more than that. I personally would not do any more than, they'll ask you more about more information about each trip, I think, in Hood House, but you don't need any more than those 4 things that I told you, 4 or 5. All right. The next thing is meals and entertainment. So, Kate goes to Starbucks for hostess coaching or something like that. You know, by the end of the year, it's like $2,000 in Starbucks. Maybe not quite that much, but that's all deductible, but it's 50%. So meals and entertainment. So, let's see if I have any examples of it. I don't have any, but yeah. So if you're meeting, yes.
Sorry, finish what you were saying.
Okay, well, that's right. If let's say you're meeting another jeweler, or you're meeting a hostess for dinner, for coffee, or a fun activity with your team, and there's a purpose for it, that would be a meal and entertainment deduction.
Okay. So my question is, like, I travel a lot. I do a lot of jewelry shows up in Wyoming, and I write off my meals like while I'm driving, like let me pick up dinner on the road
Right.
or something like that. Just not obviously while I'm there for the weekend, but or could I don't know how.
Nails?
Meals.
Yeah.
They have a list of things.
Yes, nails.
Yeah.
What about females for showing off your rings?
Probably there's going to be some gray area where you just got to decide what you're comfortable with, and it's not a lot of things with taxes are not absolutely right or absolutely wrong. So if you can coordinate things to where you're doing a premier errand and then you're doing something personal, that's fine. The personal miles there are not going to be deductible, but the portion that's there and back from premier related is.
Because I read somewhere that it said something about, like, if you're doing a out of state or out of town or whatever home show or show that you can actually write off, I think it was the meals within a day of the show. So if I submitted my party on Saturday, that my meal's on
Yes.
like Friday for my travel time, that could be
If
written
you're
off.
if you're
Not
traveling,
like just while I'm there hanging out, but
Sure.
just like my travel time meal. Or,
I don't know what the minimum miles are, but if it's a certain distance
Oh, it's
away,
like
you
500.
have like a day before the event, and
Yeah.
a day after, or at least.
Okay.
But Brittany, if I have a jewelry party in Denver and I have to eat a meal while I'm there, I'm writing that off.
Right. Well, that's what I figured. Like we went to Texas and I read
Yeah,
off
I have to
everything.
eat, and I'm in a different town to work, to make money. I made money while I was there, then I'm gonna
Right.
buy food and
Yeah.
buy that, because that's what I
Well,
said.
that's what I figured. Like when I
do
go
that
to
when I go to Denver.
right. Same thing with Wyoming. I just like pick up food. I'll write that off before
Mhm.
dinner that night or whatever. I'll just write that off. As long as it's I guess.
So the thing about meals and entertainment is it's only 50% deductible. So and I've got 5 minutes and about 3 pages left, so I'm gonna do it quick. So let's hold the questions till the end, and we'll go from there, so that way we can get through the basics here. But so just know, if you're using hood and house, if you put that in to hood and house, it's going to deduct half. So let's say you have $500 a meal and entertainment. It's going to take it down to $250, and then you're going to put it in your tax software, and it might take it down to $125. So just be careful. Just be careful about that. Training expenses, anything related to training, that's deductible. Travel, so if you ever go to a rally or to Haven or something like that, air, hotel, meals, parking at the airport, tolls along the way, all of that is fully deductible. Now, if the event's one day and you stay for a week, that's different. There's a lot of minutia that I'm not going to get into, but I'm just giving you broad stuff here. Home show supplies. So if you're getting food or decor or anything for home shows, that is deductible. If you're hosting your own shows, and you hire someone to clean your house before or after for that home show, that's deductible, but not your cleaner all year round if they're invitations, or if you print invitations for your hostesses or for any of your own, that's anything related to the cost of invitations, that's deductible. Office supplies, obviously, paper, cardstock, ink, like we have a color printer, so all the ink for that, and then we actually, the printer itself, it's used almost exclusively for Premier stuff, so that was a write-off. Other interest, credit card interest expense, so if you have a balance on your Premier card, the interest expense on that is a deduction. Legal and professional services, so bank fees, credit card processing fees, right? So when you accept a credit card, they take 2% or whatever. That 2% that the processor takes, or whatever the percentage is, that's a deduction. If you pay, a $5 monthly fee or whatever it is for your bank, for your Premier account, not your personal accounts, that's deductible. The cost of hood and house. So I'm just curious, who uses hood and house? Okay, good. So most of you do. So like we just renewed last night, $59. That's a deduction. So here's a cool one: business use of home. You can use a portion of your house for your office, for your business. Now, the best thing to do, the safest thing to do, is there's a simplified form, and method, I should say, of calculating your business use of home. And so, basically what it is it's $5 per square foot that you get to write off under business use of home for the size of your office, or up to 300 square feet. Now, I don't know about you, but I've never had a 300 square foot office. So if you don't have a big office, I'd probably calculate, like ours is 10 by 10. So we take $500 for business use of home, and that counts for the share of utilities and all that stuff. But it's just simple, and IRS has made it that way on purpose, because it can get real complicated to figure out how much of our house can we use for the business, and what was the mortgage, and what was the heating bill, and all that stuff. It's just $5 a square foot of your office, and that's a simplified method.
Perfect.
So, and that's normal, that won't raise any flags, just, that's what I would do. You can take a realistic prorated portion of your internet. Now, I know they lump that in with TV and all that stuff, right? So you can't write off your television, but you can write off your internet, or at least a realistic portion of it, and I would. Most of you probably use the internet at home for your business. Cell phone, the phone for your business, you can write that off. Not your entire family plan, but allocate based on you should allocate it based on your business use. But like with Kate, she's using it almost all the time for her business, so we just write off 100% of it. Your enrollment, renewal with Premier, that's deductible. Any return exchange costs, that's deductible. And then anything that's miscellaneous that didn't fall into these categories or something that you see on the Schedule C, there's a miscellaneous category. You just dump it in there. Every year we have at least a few hundred, if not a couple $1,000s worth of miscellaneous expenses that are legitimate expenses, but it wasn't real evident which category to put them into. And so I don't like to think too hard. It's just miscellaneous. It's legitimate business expense. I don't know where to put it. It's going miscellaneous. All right. So what's not deductible? Haircuts, nails, clothes, babysitting, not deductible on your business tax return, not on the Schedule C, but you can take on the personal tax return. On the personal part, on the 1040, there's a place to deduct for child dependent expenses. So it's not related to the business, but you can go about it that way. What to keep in your file? Keep your mileage log. We talked about that. Keep all your receipts. You don't have to organize them. I mean, some people care about being very meticulous and organized, others don't. But Kate and I throw them in a box and shove them in an envelope, and they go into a file cabinet. And that's Literally. We don't even think about it. Bank statements and credit card statements. Either you can usually download the PDF and just save it. At least do that. Sometimes you may need to print it out if you're scouring through for your expenses. You might as well just keep it at that point in your tax return file. But both your bank and credit card statements. 1099s that you get. You're going to get if you got jewelry certificates for free jewelry from Premier or any commissions, you're going to get a 1099 miscellaneous from Premier Corporate. You will need that, and you need to keep that. So you also get a 1099 from the credit card processing company that tells you how much you processed on your credit card transactions. Not for your expenses, but from your customers. Does that make sense?
From like Square?
Yeah, exactly. Okay. Yeah, and it should break it down by month, how much you did each month, and then have a total. Just keep that. That's going to be included in your Hood and House income. If you use Hood and House, they're going to know about that, so you don't need to do anything with it. Just keep it. But what Hood and House does not know about is your free jewelry certificates and your commissions, because that doesn't get sent in through Hood and House. So when you can run a report in Hood and House. It's called business. What's it called? No, it's there's a profit and loss, but then the one that there's a report that mirrors your Schedule C. Like all the lines match up, so you can just take the numbers off of Hood and House, except for your mileage expense, because they take half off already, and put it on your Schedule C. Hood and House does not know about your commissions or your free jewelry certificate income. So you're going to have to add that in to your income on your Schedule C. Does that make sense? Okay. So free jewelry certificates are taxable. Anything of significance like that you get for free is taxable. So that's why you'll see that on your 1099. All right, almost done here. So most of you, just to clarify, people wonder like what kind of business should we set up or should we have? It's going to be a sole proprietorship for pretty much everyone. If you start building a significant downline and earning more significant commissions, you may want to incorporate. But until that time, don't worry about it. It's just going to be a sole proprietorship. It's going to be a simple Schedule C. Okay, a couple quick tips I just want to touch on. If you don't have a separate account for your Premier business, have one, okay? So it's easier to track expenses. It's real sloppy if you don't. So it doesn't have to be a business account. You can just set up a personal in your own name. get a debit card to go with it, so that way you can run all your expenses right through there. Or if you have a credit card, that's fine too, but anything you want, just make a normal checking account with a debit card. At the end of the year, you can oftentimes run reports that categorize things for you, and you don't have to enter into Hood and House every single transaction. What I do is I total them all up, go to December 31st, 2016, meals and entertainment, $10,000. No, not quite that much. But all I want to do is get it on the report so that I can get it on my spreadsheet. I don't need Hood and House to have every transaction, right? So if you track everything in a separate account, that's easier to do. Okay, just one or two more quick things. Make sure it makes sense when you're done. Look at it and say, does this make sense? I was looking at our tax return, or the Schedule C a couple years ago, and I'm like, this just doesn't make sense. Well, I was looking at Hood and House, didn't add in the commissions that Kate earns to the income, because Hood and House doesn't include that. So just look at all the expenses, make sure it makes sense. If not, think it through. You'll probably find what's missing. Just remember, it has to be reasonable. None of us are going to get flagged by the IRS and get audited, most likely unless we're doing something super crazy. But just ask yourself, if what I'm doing is reasonable, then I'm probably going to be in good shape. So with that, at the end, I'm going to, I have some coupons for Liberty Tax. If you decide you want to have someone do your taxes for you, I have business cards you can, for the manager and one of the partners there. You can ask for her. Her name is Sabrina, and you can set up an appointment. She can help. I think there's coupons for a discount, and then Kate's going to put something out on Facebook as well that'll help connect the dots for you on that. So I'm sure we don't have.
Put these 25% off coupons, and then Sabrina, she's the office manager, like Jeremy said, at the Liberty Tax here in Fort Collins. And I'm just going to put them over here by the sodas, so you can help yourself to them at the end of training.
So if you want to catch me for questions afterwards or more detailed stuff, I'm happy to try to answer them. So.
Thank you.